Mutisunge.
Hi, how are you?
Fine, thank you. So it's been a rather quiet week on our markets. Could you take us through a wrap of the week with regards to the performance of the markets, both locally and globally?
Okay, so I'm going to start with global markets. So I think the theme this week has been around the stalemate between Washington advisors and the Democrats with regards signing a 1 trillion stimulus package. Unemployment is ticking up in the US, and there was a push to then sign, a 1 trillion package so that people could be paid the same way they were paid earlier in the year, like the 2 trillion. But then that stalemate as well has actually priced into the markets. And then we've seen geopolitical tensions, we've seen trade war rifts. This Saturday, the US and China will then be meeting to discuss phase one trade deal. And look, there have been frictions between China and the US. You know what's been happening with the WeChat, the TikTok, and all that is tension. Just a few weeks ago, they were threatening to close each other's consulates, and that then, weighs what the trade deal would be. So if you look at performance of base metals, that priced into precious metals, I'll tell you that gold did dive 6% down, but that's gone up 2.5%, and it's trading for $1,950 an ounce. Silver gave up 16% down, and it's up back 6%, and it's trading for about 27. So when you see precious metals rally like that, it means there's so much uncertainty in the world because everyone now is looking to lock up their liquidity in precious metals. We look at oil. The oil markets have been pretty much stable, $45 a barrel. That's for international ICE Brent, while WTI US crude futures on the New York Mercantile Exchange was about $42. Of course, supported by falling inventories in the United States. And as well, that delayed stimulus package I was talking about is then pricing in, because what that means is that demand globally will then be shriveled and the world is pretty much very uncertain. We look at corona cases, they are now north of 20 million with over 735,000 deaths. That's another factor that is pricing in. But one positive factor this year was the vaccine in Russia. Everyone has been, there's been positive hope. Everyone thinks that, yes, when we take that vaccine and then economies will reopen, that's what has been driving markets. Then locally, yes, we had a treasury bill auction yesterday. The central bank managed to raise about 1.4 million kwacha, and the offer was 1.3 million. Oversubscribed, yes. Treasury bills have performed rather very well this year. That's about 130%. If we look at the demand in the 1 year, liquidity right about 794 million was locked up in the 1 year, which was paying right about 25.4, which was down 7 basis points. And shockingly, we saw appetite in the 3 month. Why I say shockingly is because the 3 month is underwater. The 3 month is paying 14.5% below inflation. So it doesn't make sense to take an investment when it's below inflation. But that seems to suggest that that tenor was definitely, bid by probably pension funds, trying to get cheaper funds to, fund the government. There wasn't any offshore appetite for this one. It was just local, and you would see, judging from the outcome. There have been very interesting developments that have been happening, for example, and the reason why you could have actually seen a higher appetite for treasury bills, but then it was lower than what was anticipated, is because we're seeing some trading activity in the secondary market, 2-3 year bonds that are paying 33%. Who needs 1 year bonds? 1 year treasury bills paying 25 when you can get 2 year paper paying you, 33, 32%. So there is an arrears dismantling program that, the Ministry of Finance alongside the central bank is addressing behind. And it's actually a good thing that arrears are being dismantled. In fact, why I talk about this is because this is the same factor that is causing currency depreciation. If you've seen, the kwacha has started to depreciate because then you have those players that were given bonds and they're now selling those bonds and they want to pay down dollar facilities. Now they're demanding dollar. So in a week when we would have expected the kwacha to appreciate to levels of 18.2, we're seeing the kwacha pushing up to 18.4. And our forecast is that in the next quarter, we expect that the kwacha will continue to depreciate because then we're getting into the agric season. And then that farmer input support program usually demands that, fertilizer is paid for in dollars. So we expect to see dollar demand then ramp up in that quarter. So we have a trading range of roughly 18.4 to 18.784. That's where the kwacha will pretty much end the year.
All right, so the central bank has named 4 brokers for the foreign exchange market. Can you hear me?
Yes.
So can you tell us more about this and especially what impact this will have on the market? And is this common in other economies?
Okay, so Well, yes, it is common. So you see, the thing is, Zambia is a floating exchange regime. So your exchange rate is determined by market forces of supply and demand. So these brokers are ICAP Securities, there's Emerging Markets New York, there's Continental Capital, and there's GFI Money Markets Africa. So these four are then the brokers that specific banks, the big players, will then have to trade through for price discovery purposes. So on one end, it's bittersweet because then what this means is that if you look at in totality everything that the central bank has done in the foreign exchange markets in revising its foreign exchange money framework this year is, first of all, they started with a crawling peg that would then dictate by how much traders would then move the exchange rate. Secondly, they came in to dictate and say traders would then bear personal liability for swinging the markets. This was at a time when the kwacha was then, running away and very volatile. Thirdly, we've seen dollarization of mining taxes. And fourth, we're seeing this. So this seems to look like it's a step towards a managed type of float. This is very common in Nigeria. This is very common in Kenya. The only cons with this type of method is that you have a step type of exchange rate where on one day you can wake up and your exchange rate just moves significantly, which is pretty much not good for business. So we'll probably see how this then plays out, and as the central bank gives pretty much more information around that. But it's merely regulating the markets. And look, I don't believe in dictating markets. Markets should just be left to supply and demand, and that's more reflective. So I don't know how offshore players will receive this, but it would definitely be mixed feelings.
All right, so what are your views on the amalgamation transactions between Access Bank and CAVMONT Capital Holdings PLC, the parent company of CAVMONT Bank? Is this good for the Zambian market?
Yes, it is good for the Zambian market. I'll tell you something. In 2015, I remember Dr. Gondwe. I had a conversation with the former Bank of Zambia governor, Dr. Gondwe, and he said he would rather be central bank governor for 7 or 8 well-capitalized big banks than have 19 banks split across and splitting profits and capital. So the amalgamation is a good thing in itself because you're going to have a big entity that is leveraging off each other's technology, capital, well capitalized. I think we've seen what the impacts of amalgamations are, and it's an opportunity for Capricorn to exit CAVMONT because I think you and I know that CAVMONT has really struggled in the Zambian market, but then Access Bank has penetrated. So you have an Access Bank that's going to buy off CAVMONT, and this would then result in a bigger bank, more competitive. I think if I make reference to the last amalgamation we saw in 2016 was Bank ABC and Finance Bank, and you can already see that Q2 earnings, they were the second best performing bank in terms of earnings. So you can see that it's actually good for the Zambian market. We'll now have bigger banks. We expect to see bigger deals and wider products, and it will just increase the competitive landscape of the commercial banking industry.
All right, Mutisunge, thank you for coming through. Do have a great weekend.
Thank you.